Good afternoon, everybody. Good afternoon to anyone who is following us in this moment. I know that you can follow us on Facebook, YouTube, and Twitter if you want to. I know most of you, they're gonna ask for the first time, they're gonna see me for this year. Today is the 2nd of January 2023. I will wish you first a happy new year. And most of you will ask questions, so why this guy today is here. But I think those who are my friend on Facebook and YouTube, sometimes you following my videos, but it's in different languages. I would like to let you know for the first moment that I speak multiple languages, and English is my second language. And I think I'm trying to tell you already, I have accent, and that is a good thing sometimes. For those who will have some difficulties to understand what I will be talking about because of my accent, I think for the first show, the second show, you're gonna understand everything. So right, it's gonna be the first show in English for taxes. As you know that we're getting ready for tax season 2023 for our taxes. 2022, we're going to talk about it. But first of all, I'm going to present myself, to introduce myself to you. I've been doing tax return more than 5 years in the United States, and my name is Mr. Mike. I'm a tax professional, and I do have different videos, but it's in French and Lingala. Lingala is my dialect where I come from, and I got some shows in French. But this year I said, okay, I will now start doing my show in English too, because I am living in the United States, and when we're talking about tax return, it's for those people living in the United States, and the 98% of people, they're speaking English. And that's why I decided that I will do some show in English. And if you find any mistake because of my accent or something, expressions, you do have to understand that is my second language. And you can correct me by yourself, but I'm trying just to inform you what's gonna happen. And this is very, very exciting for myself. You need to know that this show, it's very, very important. It's a live show. That's mean I don't wanna make this show like I need to make it shorter or longer, but I wanna talk to you. I wanna talk to you, to my audience. And if anyone have any contribution or anything to say or any question according to the title of the show, you can ask directly online. We're going to give you numbers. This number will help you anytime you have any question. You can directly address your question, and we're gonna try to respond and to tell you anything possible. This is the number that you can write down. The number is not my cell phone number. The number you saying is the number we're gonna use for this show. We're going to talk about tax return, and anything you need to ask, you can just dialogue this number. Then you can call us directly to address your concern or to ask questions. And you know that this is very, very important. And this moment, too many people, they're wishing to have good refund and good information about tax return. That's why I'm asking you to share this show, to share the link. In this moment, we are on the same time on live show in Facebook, Twitter, and YouTube. We put on the bottom of there, you can see all the link. And we have a special place, that means a special connection with Patreon network. If you need to support us, you can go to Patreon to subscribe. Then you can have a special show if you need to talk face to face with me, or things that you want to know more, because you need to be aware that we will be not talking about everything here, because you know it's to talk to you, it's more energy, and we will need some support. And if you think that you can support us, you can subscribe to Patreon. You can send us your email, then we're gonna send you the link, and you can follow everything as much better. You can understand what you want. That is very important. And you can contact us. We're gonna talk about, I will tell you the subject of our show today, the title, and you know now my name, and you know when you can contact us. You can it's a live show, and normally we schedule this live show for every Sunday. You can follow us directly every Sunday from 10 p.m. It's gonna be Atlanta, because I'm living in Georgia. That is where I'm located, in Georgia, Atlanta. And I will tell you something more. If you need to work with us, it's not a problem. Whatever state you living in, we can work with you. It's very easy, because maybe the time we come that you really have time to talk with my other clients. They're not living in Georgia, they live in different states, but we still working, and they got a good result. And the other exception working with us is, whatever your problem with tax return, we can address it. We can work on that. Whatever you have back returns, if you're working with that, please contact us, and we can address it and fix your problem. And we can help you also to be ready anytime when you work in your business. We can give you some support. That has been said. I will go directly what we're going to be talking about today. Don't forget, share this show, ask people to subscribe, share the show, because it's very important. If you need to call us, it's very easy. You got a number. Okay. Normally, trying to start this show, I know I will prefer normally to start at the beginning, because we're going to talk about individual tax return and the business tax return. But I will start with the individual tax return. Normally, I will prefer to go back at the beginning to talk about the income, to talk about the gross income, to talk about the adjusted gross income and the deductions and stuff like that. It's gonna be better. I will go back to that. But I would like, because of time, I have too many shows to do. I will prefer directly to attack what people they have as concern, what people they need to know about what's gonna happen for their tax return. It's very, very important for me, and I will let you know, and you're gonna understand what's going on. In this moment, before we going to the show, I want you to start to share our link. Okay, that is gonna be very nice. Okay, today we're going to start talking about let me put the title for you. Today we're going to talk about child tax credit and other dependent credit, and I'm gonna put the title for you. As I said, it's like we talking. Okay, we talking. You have any concern, ask your question. I will make sure that I can make this very short. Okay, this is the title, and this show is just let's talk Tax Return 2022 Season 2023. And the title of today is going to be Child Tax Credit and Credit for Other Dependent for 2022. What's going to happen? What's going to change? Or what changes we have? Okay? And if you're going to see on the bottom, you got the messages the message that you can see. We're trying to say something over there. It is up to you to take your time to read it and to understand what's going to happen. Okay, let's jump on our show, the title we're talking about. You have to understand I'm myself the technician. I'm behind the cameras and I'm behind the everything. Okay, now as I said, we're going to talk about credit. There we go. We're going to talk about credit, and I'm gonna be here. It's gonna be nice. Okay, we're going to talk about credit. The question is, what does it mean in tax return 2022 when we're talking about credit? Too many people, they don't know normally the meaning of the credit, and we're going to explain and to give you some explanation about it. If you have any question, you can ask. It's not a problem. As the definition says, it is a benefit that the federal or the state government grant to you to compensate some of your expenses incurred during a fiscal year in your household or your business. You need to understand, whatever you're doing, individual tax return or business tax return, the government grants to you some advantage, it's like they're trying to reimburse something to you, because they understand that in the year you had some responsibility and the government need to reimburse some of the expenses, and the way they're trying to give you some money back is the credit. They're giving you some credit, and you need to be qualified for those credits. That is very important. Whatever you're doing, business or individual tax return, the government trying to give you something back. That is very important. That is the things that you need to retain. Okay, now in this show for credit, we're going to talk about 11 credit. And yourself in the individual tax return, you're gonna see which credit you will be qualified for. If you are qualified for more than one credit, that means you're lucky, because you're gonna make some more money. The first one is gonna be child tax credit. That is the title for today. And the second will be credit for other dependents. We're going to talk about it today. And the third is gonna be additional child tax credit. And the fourth one is gonna be child and dependent care tax credit. And the fifth one is gonna be earned income tax credit. We're going to talk about it. And the sixth one, we're going to talk about education tax credit. For those who know this, we're going to explain the American Opportunity Credit and the Lifetime Learning Credit. We're going to talk about it to explain the difference between those. Okay. And the seventh is going to be adoption credit. The eighth will be residential energy credit. The ninth will be first time home buyer credit. The 10th is going to be plug-in electric drive vehicles. And 11 will be premium tax credit. Those are credits we'll be going to talk. After we finish those, we're going to another type of tax side to explain what's going to happen. Could be deductions. We're going to talk about it, but right now we're going to be focused for credit. Okay, let's talk about the first two: child tax credit and credit for other dependent. You're gonna see on the bottom of there in our explanation, we're saying at the end of this show we're going to explain No refundable means what? The meaning of that, because too many people, they don't know, and we're going to explain very clearly to make you understand, to make sure that you do understand the meanings of no refundable credit. Okay, let's start by the first one, child tax credit. What's going to happen in the tax season? Let's go back to the 2021 child tax credit. What happened? What we had? I think as everybody understands that for last season, that means last year, we going to the first column, and the first column is clear that you can understand that according to the ages, who was qualified to get this child tax credit. You can see all child less than 18 years and below age of 6, we got different credit. You gotta see if your child was under 18 years old, the government gave $3,000 per child, and below age of 6, the government grant $3,600 per child, and this credit was refundable. And we had the option to receive this money. You remember that people they received this money, I think, on the 2021. On the 2021, people from July, the government decided to grant each family or each child, if your child was under 18 years old, they were giving monthly payment of $250, and if your child was below 6 years old, they were granting $300. And you remember that when you went to do your tax return, we got a recovery credit. They give you the difference that you didn't receive. That's why you see that last year people, they got money, and you have options, free options to get the money or to refuse, and to wait until you get the total amount at the end of the year when you're doing your tax return. And it was a good year because everybody enjoyed to get more money, more refund because of kids, and that money is refundable. Remember, we say at the end of this show, we're going to explain to you the difference between refundable credit and no refundable credit. Okay, and the nature of this credit, as you say, the nature of credit was refundable. Option to receive the credit in advance, $250 and $300 monthly, and the law was the American Rescue Plan Act, expanded the child tax credit only for 2021. Let's make this clear that you have to understand that 2021 was for me a good year because they give more money to the family when you have kids. We got too many things happened. We're going to ask you, ask people, your friends, share this show, ask them to subscribe, and make sure that you're gonna be following this channel, this show, to get you ready for your tax return 2022, who begins today. Today it begins, and we are ready to do that. So let's move on. Now, if you say for 2022, we're going to talk what's gonna happen for your child tax credit in 2022. There is too many difference, too many changes that I will show you. According to the age, you're gonna see here there is a little difference because for 2021 was all child under 18 years old, and we got two sections of credit. But now this year for 2022, we don't have two sections of credit. We got only one, and the age of a qualified child is under 18 years old at the end of the 2022. And the child tax credit amount is $2,000 per child. And this credit is non-refundable credit, not available in advance, available in full only to taxpayers whose income tax liability is at least as great as the credit. We're going to explain that. Taxpayer must also have a qualifying child. The law still the same. They say the American Rescue Plan Act, which expanded the child tax credit only for 2021, failed to become law for tax return 2022. You need to understand that it's very, you need to understand that for 2022, this law didn't work out. They didn't accept to keep those credit that they give to everybody or the family on 2021. This is a big changement, because here I will assure you that, I don't know, maybe if you are qualified for those other credit, that's good, but for your child tax credit, it's going to be different. We're going to explain non-refundable credit means what. The explanation will come up. Let's move on. Okay, now, for those who want to see or to understand why we're talking about this, you can refer to the IRS website, and you can see what we're talking about. Everything is clear according to the law. It's not, I'm not making that, okay? I'm trying just to explain it to make it easy for you to understand what's going to happen for your tax 2022. Let's make that very clear for you to understand it, okay? Okay, now let's see who is required, or the requirement or condition if you need to get this credit, okay? Here you need to make sure that you do understand what we're going to talk about it. Okay, you're gonna see that you cannot go above over $400,000 if married filing jointly. If you filing your tax return jointly with your wife or your husband, that means if you need to be qualified, you cannot go over $400,000. And if you have in the other different status, like you feeling as other than married filing jointly, that you cannot go over $200,000. And who is a qualified child for purposes of the child tax credit? The child was under age 17 at the end of the tax year, did not provide more than one half of his or her own support during the year, living with the taxpayer for more than half of the year, is claimed as a dependent on the taxpayer's return, does not file a joint return for the year, or files it only as a claim for refund, and was a U.S. citizen, a U.S. national, a resident of United States. And the child, the social security number the child has to be issued before the due date of the taxpayer's tax return. For this year, don't forget, it's gonna be April 15. To a U.S. citizen, to a line at the time of U.S. admission for permanent residence or under a law permitting engagement in United States employment, or to an alien that the time of the change in the status permittee's engagement in United States employment. That is very important to understand and to know who is qualified to get this tax credit or to take this credit. I think if you have any question, be ready to call us. It's not a problem. We'll be here for you to explain you. Okay, let's go and move on. Let's talk about the second one, other dependent credit. What's gonna happen for this? I'm gonna explain you too. Here, if we going in this table, you're gonna see the age for those are qualified for this should be all child on the 7 and older as a dependent other than a child. I think this issue we tax people or tax professionals sometimes we having some trouble. People they coming when they don't read the law, they do not understand the law. You see, we were talking about 18 years old last year. This is gonna be 17 years old, but people will not understand that. We're gonna have some issues. We have to explain people. That's why the reason of this show is for you to get time to follow and to understand, to explain, to share the show, because to help people to understand very, very much better what's gonna happen for the tax season 2023 for your tax return 2022. It's very important, very, very, very important. And you're going to see that the dependent, that means a dependent parent or sibling, for example. Don't forget, when you're living in your house, instead of your kids, you gotta have the people living with you. They can have that benefit to get the money. A qualifying child for whom a credit is disallowed solely because the taxpayer failed to include the child's social security number on the tax return for the tax year. That is clear, and the amount for this credit is $500 per dependent. It's a non-refundable credit, not available in advance, available in full only to taxpayers whose income tax liability is at least as great as the credit. Taxpayer must also have a qualifying dependent, and the law stays the same, the American Rescue Plan Act. That's very important to understand and to make sure that it's very, very clear. If it's not clear, you do not understand something, don't worry about it. That is, be ready to ask your question or questions, and we're ready to respond to that. It's very, very, very important. Okay, now requirement for those who want to get this money. I think the requirement they're still the same. They're still the same. That means still be the same requirement, but I don't see. Okay, I see here, for example, the difference. Okay, let me just say something. The person must be claimed as a dependent on the taxpayer's income tax return. The person cannot be used by the taxpayer to claim the child tax credit on the additional tax credit. Here it's understandable. It's understandable because when they say for child tax credit, it's for all the child under 17 years. That means if you are not under 17 years old, that means you become another dependent. That is very clear to understand, and it's clear that you need to be either you need to be U.S. citizen, national, or residential alien. That is the requirement. The social security number doesn't change. It's the same requirement with check tax credit. You need just to make sure that you do understand that. Okay, it's the same. Okay, now we're going to explain non-refundable credit. You need to understand our explanation will help you to understand very well that difference when we're talking about non-refundable credit. Okay, it's very important for you to understand. Okay, you're gonna see this is 2022 instruction for schedule 8012. You're gonna see, as they say, the child tax credit and the other tax credit, they're not non-refundable. It's non-refundable credit. You need to understand that, and we're going to explain why they are non-refundable. And we're gonna give an example. By example, we can understand. We're gonna explain to you. I know that we had different numbers, but we're gonna fix it. It's just an explanation, but it's late because I cannot go back again to correct this. But I'm gonna explain to you this. We're gonna make it easy. If you have a pen, you can write down. It's gonna be easy for you to understand. Okay, we got Mr. Baoba. Mr. Baoba is a man and is the head of a household, and he make like adjusted gross income 17,900, and we made a mistake the other side. Instead of saying 17,900, we say 79. You have to understand the computation. That means you gotta correct it. Okay, this example is very easy for you to understand. Very easy. Okay, for those don't understand the adjustment or the adjusted gross income, what does it mean? We're going to explain. We got a special show for you. You're gonna understand. And for those that don't understand the standard deduction, they're going to understand. We're going to explain to you. And for this example, our object is only to make sure that we can explain to you how this credit that you can get, how we can say that this credit is not, it's non-refundable credit. That is the main concern for us, the main subject for this explanation. Okay, and as you see, Mr. Baoba received all year $79,000 and 900 as adjusted gross income. He got the option to deduct 19,400 as a standard deduction. You need to understand here. Let me explain to you. I know I need to tell you for this computation the deduction we're talking about, just to make sure that we're gonna be all in the same page. Okay, normally when you have an adjusted gross income, the government grant you, give you option, because we got different expenses that the government, if those expenses are qualified expenses, you can deduct them by yourself. We're calling that itemize those deduction, that those expenses you can itemize them. That means they give you option to have a list of qualifying expenses that you can deduct or itemize. If you think that you're gonna have, that means when you have a list, you compute all the numbers, and you think that those numbers, the total, going to be more than what the government gonna propose to you, we can use it. That's why we're gonna itemize. Let's say that you itemize, that means your expected or expect itemized expenses. It's about, for this example, it's 18,000. You see, for this example that we're doing, let's say Mr. Baoba, it puts everything, says expenses, but the amount, the total is 18,000. As a professional, tax professional, we're not going to take that deduction. Why we're not going to take that deduction? Just because the main concern is to make sure that your taxable income can be as much as very low. It's gonna help you to make sure that your tax will be reduced. If the taxable income is a lot, it's higher, that means you're gonna pay more tax. Okay, more tax you're gonna pay. That's why if we see that the expenses that you have in your hands, it's not more than the standard deduction, we're going to use the government deduction that we're calling standard deduction to compute your, or to fund your income tax. That means we're gonna fund your taxable income amount. That is very clear, and I will try to make it clear in different shows to explain you exactly the standard deduction, and for 2022 what's gonna be the standard deduction and how it's gonna work. We're gonna have some calculations, and we're going to talk about deductions in general to make you understand everything. For this example, let's say the deduction was, for this example, let's say the deduction was $19,000. Oh, excuse me, 19,400. As you can see, we're gonna use that 19,400 as a deduction, and after computation, you can see that we find 54,000. I told you there was a mistake. Don't just understand. Normally, if we take say 79,100 minus 19,400, we're going to find normally 60,500, but we don't want to see that. Okay, just understand, because I cannot go back with the computation. Let's say that the taxable income will be $54,000. That is the taxable income. You can see, for example, if we have this, let's say for example the tax table for this, we can see this, that just in example, let's say Mr. Baoba, he got 54,000 as taxable income. And if you say, okay, the taxable income for this amount for 2022, let's say that it's gonna be $7,503. That means that is the amount that Mr. Baoba has to pay, and that amount should be shown in the 1040 as follow. It's very important. It's just something we need to show you to make sure that you do understand. Okay, let's go back to this example. Let's say Mr. Baoba has 3 kids, and those 3 children will give him 3 times $2,000. You're gonna have $6,000 like a credit for child tax credit, and we say that these credits are not refundable. And the main concern, as we put in the big letters, non-refundable credit is used only to bring to zero your tax liability. Because Mr. Baoba, according to the tax table, he has to pay for $54,000 taxable income. His tax liability is $7,503 that he had to pay, and he got $6,000 as a child tax credit because of 3 children he had. And the computation it's very clear that if we take the tax liability amount minus the non-refundable credit that he had of $6,000, the remaining balance will be $1,503 remaining tax liability amount that you're gonna pay. And I will show you in the following slides what's gonna happen, different computation. But let's say if let's say the tax liability was $6,000 and the child tax credit still $6,000, you're gonna see it's easy that 6,000 minus 6,000 and the remaining balance will be 0, because we say, remember, no refundable credit is used only to bring to 0 your tax liability. That is very clear for anybody to understand what we are talking about. It's very clear to understand. But if you need to understand more about this, we got some gift for you. This gift will help you to understand. I will give you some examples. You can see the first line, we got 54,000 as we say taxable income, and the tax liability for this amount, let's say $7,503, and it got 6,000 as a child tax credit for 3 children, and we say that he got $1,503 that he has to pay back to the IRS. And the computation is simple. You see this column, let's say that in his W2. You can see always when you receive your W2, you can see the square number 2, where is the tax you had to pay in the year. Let's say for Mr. Baoba, he had to pay, or he paid $3,050 for all year, and the computation will be simple. 6,000, he reduced his tax liability to 0. That means the remaining is $1,503 that he have to pay. Because he paid already $3,050, the remaining balance, if we take $3,050 minus the money he has to pay to the IRS, that means the remaining balance of $1,547 will be back to him. That means whatever he paid, but in computation of tax return, they will pay him back this amount. That is very important to understand. Let's move to the second example. That means here, let's say the tax income was $46,050 and the tax liability was $5,230, and he got $6,000 like a check tax credit. Because we said the reason or the subject, the main subject of this credit this year is just to reduce the tax liability to 0. That means whatever any amount will remain here, that money will be for free, will go to 0, will be dropped down in the water. That means, for example, here he got 6 because we all done with what he's supposed to pay, and this amount bring his tax liability to 0. And we keep saying if he paid $3,050, that means the IRS will give him back all this amount, whatever he paid, but in tax return computation, you're gonna get this amount back. Okay, let's say that you got different examples that you can see, and it's very clear for you to understand what we're trying to talk. If you have any question, you can call us. It's the right show that you can call, but we can give you explanation about this. I will thank you, and understand that everybody has time to understand what we were talking about. And if you have questions, it's gonna be nice for you to tell us or to call us right away, and we're going to tell you if you need more examples or more things to talk about. Then we can just tell you and give you answer. I will be waiting for your call. If you have any question, I give you 2 minutes. You can call, and the number, as we said, remember our number we already gave to you. I will put it back again for you. If you have any question, you can call us. It's very simple if you have a question for that. And as I say, you can subscribe, you can share, you can like our show, and tell more people to subscribe to the channel, because every day we be not waiting only on Sunday, but if we have time, we're gonna have another show. And today we used to talk about 2 credits, and we got 9 left for you for the individual tax return. And I hope that you love or you like our show for today. For those who want to talk with us, you can call us, or you can text or send us an email. And for those who want to talk more with this show or tax return, they can go to Patreon and to subscribe. Then we can talk about the specific, the private things that you want to talk about tax return, and to get you ready for your tax return 2022 in this season 2023. If you like, I thank you again, because I know that the next show you're gonna be too many people to follow this. Thank you for following us.